Hello and welcome. You're watching Countdown on Bloomberg Quint, India's first digital live streaming business news service. I am Agam Vakil and these are the top headlines that we're tracking at this hour. Markets are off the day's lows and the Nifty heads towards the 10,700 mark. Futures see a bout of short covering. Short covering in the Nifty Bank has led to the index recovering from day's lows. It has also led to the recovery among Nifty and other indices. The Nifty PSU Bank is a top sectoral loser in trade today. All components of the index are trading with cuts. And crude oil prices are flat after Brent fell below the $50 per barrel mark. The fall, however, has failed to bring cheer to oil marketing companies.
Well, let's take stock of the situation as we speak. Good afternoon, viewers. My name is Neeraj Shah, and the markets are doing, well, they're looking actually very good. If you consider what happened at the start of the trading day, where itself we were saying that the fall was quite muted. Forget the fall being muted, we are right now in the green and trading well and truly in the green. A 0.5% move in the green, which is quite strong. A bout of short covering, admittedly so, both on the Nifty and the Nifty Bank, leading to this up move. The mid caps and the small caps, which were down quite strongly in trade in the session today, continue to remain marginally in the red. But here too, I think the intraday chart will show that the bout of recovery is very strong because the mid-cap index in particular was down quite strongly and it's almost breaking even into the green. So the Nifty mid-cap 100 certainly doing very well for itself. Look at this chart. It was down about 1.5% and just broken into the green as well, marginally in just a couple of minutes ago. Okay, let's talk about specific stocks now and see what's happening. The heat map should come up on your screen first to talk about what's happening on the Nifty 50. And you will see that when we started off, it was 4 rows of red, barely a few stocks in the green. Now a fair bit of green enveloping the screen. Yes Bank losing out, Sun Pharma and select IT names like TCS and Infosys are down in the session today. But look at the gainers. It was dominated by oil marketing companies, by the way. You don't have a single oil marketing company in the top 10 gainers as we speak. The start, it was full with oil marketing companies. Zee Entertainment, Adani Ports, UPL. There's no necessary reason why this has happened. But select private financials have done well. So HDFC Bank, Bajaj Finserv, etc., Axis Bank have all done well. And OMCs are nowhere to be seen within the first 10-15 gainers as well, which just speaks about how broad-based this recovery has been, a bout of short covering that has led to this move. Now, Agam will put a lot of light or throw a lot of light on some of the more active movers because it's FN expiry week. I just want to highlight a couple of themes or a couple of movers and shakers at the mid-cap end of the market, something that I believe is forming a key trend. So these are stocks which are seeing price and volume action both. It's not just the price action, but the volumes for each of these names substantially higher than the 20-day averages. And two of these managements will be speaking to us a bit later on in the show. You might want to stay tuned for that. What else? You could look at crude beneficiaries. You can look at stocks that have corrected quite a bit, and the specialty chemical space has come off quite a bit. SRF is now recovered a little bit, but Deepak Nitrite continues to grind lower. Vinati Organics continues to grind lower. Could be some fund rebalancing as well. This could be happening. I hear flows, negative flows from L&T mutual fund and the Deepak Nitrite, so that may be the case. And these are stocks which were the key losers, all of which are expensive stocks and corrected quite strongly session today. But I must admit that the bout of recovery that we've seen in the markets is also playing out on a Jubilant Foodworks, which was a top loser at the start of the trading day, as well as Avenue Supermarts has recovered quite a bit of lost ground as well. But Agam, what about the more liquid universe? I mean, surprising the kind of moves that we're seeing in a Jubilant Foodworks or some of the banking names. Strong recovery.
Absolutely, and it's certainly taken everyone by surprise, Neeraj. I'm going to take a look at what we've seen with respect to the futures. Let's bring up the Nifty rollovers, perhaps, and see whether or not the rollovers are picked up. But they certainly have, and what we're also seeing is, well, an increase, a considerable increase in open interest in the December futures too. This is, I reckon, towards longs. And of course, given January is also seeing a surge, so that's longs coming in there as well. But coming down to your Nifty Bank futures, again, that's where we're seeing rollovers which are lagging those of the Nifty at around 33%, not so much for the Nifty banking futures. But let's bring up India volatility, and you know, despite the fact that we have seen some recovery, volatility continues to be on the higher end. That's one thing. The second thing is it has, however, also come off from the mark of 17, and well, that perhaps could be a positive. No no surprises here when it comes to change in open interest. We have seen your, okay, so unwinding in the 11,000 call and, well, more writing around the put side. This is after the Nifty has given, a little bit of an up move, reclaiming 10,700 today. Range, well, this is again not too much of a surprise. 11,000 on the upside and 11,800 and 11,500 on the lower end is where we are seeing the most amount of accumulation. Moving on and talking about the stocks which are the most active. Jet Airways is looking at, a substantial up move there, and fresh longs coming through. Of course, it's come off from day's highs, but we are seeing a lot of longs coming in there all the same. Siemens is the other one, which is also towards the long side. So there are two of these which are gaining quite substantially. Of course, Siemens is advancing even in the December open interest. But moving on to the next bunch of stocks, and Yes Bank is of course reeling under pressure. It is one of the top losers on the Nifty 50, looking at a bout of profit taking, even though your December futures would suggest shorts building into the system. Rollover standing at 56%, and TCS of course is the other one, and it's along with the rest of the information technology pack in general, it's seeing some amount of weakness. Look at that surge in the December open interest, 41% added there, and just as much around for the January open interest as well. So there are certainly some amount of shorts building in, and we will take this up with our experts. But for now, well, market's certainly looking up, Neeraj, and it's the same for the futures and options space. And
same for the mid-cap space as well, yeah. Back in the green, but a lot of active movers and shakers. The stock that's buzzing in trade today is Mold-Tek Packaging. The company's margins may have seen a bit of a contraction in the second quarter, but I think they're confident of maintaining the guidance in FY19. The last time we spoke to them, they'd spoken about a 15% volume growth for FY19. Let's talk about what's happened between then and now with Mr. J. Lakshmana Rao. He's the chairman and managing director of the company. Joins us right on the phone line. Mr. Rao, good having you. Thanks much for joining in.
Good afternoon.
How has business been, Mr. Rao, as we come to the end of the quarter? And more importantly, how have the cost rationalization process been like?
Good afternoon, everybody. As expected, this year guidance would be somewhere around 12 to 15% volume growth. We continue to hold on it. As discussed last time, we are moving capacities from RAK and adding them here back in Daman and Hyderabad. And today, in fact, I'm at Mysore attending the inaugural function of Asian Paints, who have started their production plant here in Mysore. And we are also just behind them. In a couple of weeks, we'll be starting our trial production. And by mid-January, we hope to start commercial production at our Mysore plant. And the plant at Vizag would, somewhere in the end of Feb, it will go into commercial production. So both the plants will be adding numbers starting at least, let's say, from March 2019. So those plants are on track. And shifting of RAK capacity will also enhance capacity utilization and better yields in the coming quarters, coming months. These are the two improvements as far as the capacity enhancement is concerned. And another on the positive front is our edible oil spare packs are picking up very well. We received orders from major companies like Damani, NK Protein, and major soya oil companies in the north and mid India. So that is another growth factor going forward from next quarter onwards. So we hope to cross into the region of 20% growth for the next financial year in volume. That is as of now, the status.
Right. Mr. Rao, if you can come in on your gross margins as well, and we have seen some amount of volatility and gross margins. At least in the second quarter, we had some amount of weakness coming in there. My question really is about input costs and the kind of trends they have seen and you are witnessing for your own company right now. One, how is that working out? Two, what impact does the volatility in crude have on input costs, especially with the ones in which you are dealing in? And three, the impact on margins that we can expect moving forward.
See, you have correctly guessed, though we pass on the raw material price increase on a monthly or quarterly basis to our clients, while the prices are going up, we also suffer a bit in terms of percentage margins, though the EBITDA margins stay almost stable. But the trend as a percentage of margin looks smaller if the raw material price is shooting up. That's what happened till November. Starting from mid-November, or I would say 22nd of November to be precise, the raw material prices started falling steeply. In fact, the correction was as high as almost 14% in the last 1 month. Starting from 22nd November today, we have prices down by almost 15 to 17%. And going forward with the crude prices ruling low, the raw material prices also are expected to come down. And in a coming down cycle, we gain because we take the pricing of higher raw material price. So we will have an advantage. So hopefully, if the price trend goes down and crude stays where it is, we may probably see improved margins in the coming months, starting from January.
All right. Mr. Rav, you also spoke about a facility coming online soon, which follows that of Asian Paints. Can you give us an update on how utilization stands currently and in terms of capacities, what we can expect towards the end of this financial year? What numbers are you looking at in terms of projection?
See, Asian Paint plants, though they are starting now, they would take some time to ramp up, but that won't be very long. Hopefully from April onwards, they will contribute reasonably well. Almost I'm expecting 8 to 10% growth coming from these two new plants in the next financial year. Coming to the fourth quarter numbers, we are very positive about the demand coming from ice cream sector, which starts picking up volumes from January. And now we have added major ice cream companies like Arun Ice Cream, that is Hudson. And of course, Vadilal is being with us, and Amul and Laza going in a bigger numbers. Because this is our actually full season for ice cream. So we see the numbers adding up in the months of January till June, July from the ice cream sector. And the new ghee packs, what we introduced, also found very good response in the market. And their sales also starting from end of December, early January. So numbers of food as a percentage also will increase in the fourth quarter, which we didn't see in the last couple of quarters. They were more stagnant. So going forward, I think both the paint industry numbers from Asian Paints and the food from ice cream and ghee sectors will be adding to handsome numbers starting from January 19th.
Right, Mr. Rao, on that note, if we could just add an additional question. While you have spoken about, being in partnership with a whole host of companies, even the second quarter you had added HUL as a client. If you can't name the companies, I understand, but is there more talk in the pipeline? Is there a potential for more companies to come in in the final quarter of this financial year?
Yeah, HUL, though the order came last 2 months ago, the molds are all ready just now, and we have started commercial production last week, and the real numbers will start showing from January. So the HUL orders impact is not felt in the third quarter, but from January we have to make supplies to them. So that will be added in the coming months.
Interesting. Just one quick question on the updates that you gave for the edible oil business. You mentioned that orders are coming in thick and fast. What would the numbers look like in that business, and how would they look like in FY20?
See, last year it was hardly 7 crores all put together, and currently for last 3 months alone we have done more than 6-7 crores. So going forward, if the numbers continue to grow or stay where they are, from maybe 12 to 15 crores this year, we can even look at 25-30 crores of sale value added in the next financial year.
Interesting. One small follow-up, and not really on the edible oil business, but on numbers. With a 15% volume growth, I think if I look at the brokerage notes, they expect revenue growth to be higher than that, about 20-22%. This is the analyst's estimate. Would you believe that, one, is that a correct estimate? And two, if indeed that is correct, then when you do a 20% volume growth in FY20, what's the kind of revenue run rate that people should anticipate?
See, if the raw material prices have stayed what they were in the last 7 months, reaching a 20-22% of value growth, while 15% is the maximum volume growth we're anticipating, is a correct estimate. But if the raw material prices start going down in the next 3-4 months, probably the 2022 might look like 1820, but it is certainly high because overall average raw material cost this year is higher than what it was last year. And going forward, I see for at least for the first 6 months of the next financial year, the raw material prices will be little sober. And the numbers on the revenue side, though we register 20% volume growth, the numbers on the revenue side also might look similar, like 20%, because the stagnated raw material pricing is what I'm anticipating in the next financial year.
Okay. So about 20% revenue growth in FY19 and 20% revenue growth in FY20 is a fair estimate, I would reckon.
Yeah, in terms of revenue, but if you really look at the value add in the next financial year is going to be much better.
All right, Mr. Rao, we leave it at that. Thank you so much for taking the time out and joining us this afternoon at Bloomberg Quint. Of course, well, the shares of the company today are on the rise, on the move. And they have been actually, they've been bucking the trend today. So despite the initial weakness in the mid-cap space, Mold-Tek Packaging has been up and about in trade since morning. But with that, we move on to the second conversation of the day, and that's Brigade Enterprises. The focus on leasing portfolio has impressed Motilal Oswal. The brokerage firm has initiated coverage on the stock with a price target of 282. And Motilal Oswal expects a substantial rise in the leasing area for the company to as much as 6.2 million square feet by FY22, and it will take perhaps Brigade Enterprises to newer levels with that. So let's bring in the CFO of the company, Atul Goyal, who is in conversation with us. Mr. Goyal, good afternoon, and thank you so much for taking the time out. Let me just ask you a little more and prod you a little more about the leasing business. Where are we today, and what are the expectations going forward?
See, we are at 2.5 million square feet as of now, and we expect to go to around 10 million by 21-22. So around 5.5 million square feet is already under construction. First phase of which will get completed in March 19, and rest by Q3 19. And then there is a 2 million of twin towers, which we call, which is also the construction is starting, and it should also complete in 3 years' time.
Okay, and Mr. Goyal, if you could also tell us about what geographies will this cover?
Yeah, see, major 3.5 million is in Bangalore, and 2 million is in Chennai, and again 2 million, which is twin towers, is also coming in Bangalore. So 5.5 million is coming in Bangalore, and 2 million around in Chennai.
Okay. And if you could also tell us about how your residential business is currently, and if you're seeing a pickup, if at all, because as we know, the industry so far has been under quite some pressure with respect to this segment. Yeah.
See, residential has been going good. We had good sales in half yearly, and we expect the same run rate to continue. We are looking good demand in affordable housing, and that's where our major launches are being. So sub 1 crore, there is a good demand, and we hope that run rate will continue in that space.
All right, Mr. Goyal, can you also give us your status check on your hospitality business? Again, the note mentions that there is some expansion on the cards. What more can you tell us about this?
See, we already have around 780 to 780 rooms, which is already operational. And we are building around 500, 600 keys, which we have been built, and around, so we aspire to go by 22 to 2,000 keys. So that is what the plan is in hospitality.
And how long are you seeing this expansion being taken place in? What time horizons or timelines are you working with?
It's within 3 years.
All right. Also, sir, if you could give us an update on the stake sale in your hotel portfolio business, how are you going about that? And is this to do with funding coming through for your other projects?
Yes, yes. So, see, we have already signed NDAs with couple of people, and discussions are going on. So we will try to close it as fast as possible. Yes, this funding is for growth capital for growth of the hospitality business.
Mr. Goel, good afternoon. Would you believe that in 3 years' time or thereabouts, your leasing and your hospitality portfolio would be a lot higher in percentage terms for the company as compared to the pure play realty portfolio, as in sales residential portfolio?
Definitely.
Is there a target that you have internally set up, and why would that be the case?
See, we have set up a 1,000 crores revenue from leasing and around 600 net, around 600, 700 from hospitality. So I think these both business should be around 50% of the total which goes on. If residential does, I think it should be portfolio.
Okay, slightly patchy network, but I'm guessing that about 1,600, 1,700 crores of the non-real estate sales portfolio is what Mr. Goel is talking about. Would that, I mean, so why this conscious strategy, Mr. Goel?
See, as you know, residential is a side business, and so it gives a company a steady flow income during the bad times, and that's why we have been strategizing that we should have a good leasing portfolio and of course hospitality portfolio to cover our residential sales.
Interesting. I have one small other question. I mean, if we just look at how people are looking at residential or real estate companies right now, and the belief is that the market capitalizations of companies are currently not pricing in the fact that the revenue models of these companies are changing dramatically, and in 3-4 years' time, the well-established names could have a revenue run rate or revenue number which is 2x or 3x the current revenue numbers as well because of consolidation in the industry. One, do you think that's that sounds a reasonable estimate? And two, would that happen for southern companies as well?
Yeah, see that this is a pan-India phenomenon. After advent of RERA and GST, organized players, big organized players have been doing very well, and unorganized players there has been consolidation, and this consolidation will continue in next 2-3 years in North and Mumbai. It has already started. South it is slow, but it is starting now, and I think in 2-3 years you are right, revenue potential will be higher.
From 2,700 crores, I presume, which is the expectation that I think you laid out and brokerages lay out as well for 2019 or FY19, what's a number that one can expect, if not in FY21, then in FY22 or FY23? Ballpark estimates out here.
See, I'm not.
Can the size
go
up?
I'll not give any guidance on that.
Yeah, but can the size go up 2x from where it is right now in 2-3 years?
Yeah, definitely. We are aiming for that.
All right, Mr. Goel, the last time we spoke to you, we also saw a little bit of an increase in your borrowing costs. If I'm not mistaken, your debt still stands at about 1,000 odd crores. If you could give us an update on that, and as well as whether or not there has been any change in your borrowing costs, even for perhaps in the recent times.
Yeah, see, last time in half-yearly quarters, we had reported borrowing cost of around 9.33%. So yes, some borrowing cost has gone up. So the interest rate has been going up, and after this NBFC issues, rate overall in the market because of the liquidity crunch has gone up. We don't have much exposure in NDFC, but I think our rate will be around average rate should be around 9.4, 9.5 by this quarter end.
All right, sir. And just a word on, well, if I could say, the borrowing for housing at this point in time. So I'm sure that a lot has changed over the last few weeks. How are you seeing that scenario change? Again, last time you spoke to us, you had suggested there is no liquidity crunch. At least as far as borrowers are concerned, they are all right and good to go. Would you say the situation is more or less the same?
Yeah, it is more or less same for good developers. BC, the issue is only on NBFC, not on the banks. So we generally take construction finance, and which is available with banks now. And we are getting residential construction finance at around 9.7% now. So we are comfortable in liquidity.
Okay, of course. Well, there you have it. That's Brigade Enterprises, which is trading higher by around 8.4%. But Mr. Goyal, thank you so much for joining us and taking us through the outlook of the company. And well, wishing you the best for the future. Of course, as I was suggesting, you saw that up move of Brigade Enterprises. I'm not going to claim that it is our doing, but it is trending higher and at days highs at around 225. But with that, we move on.
No, just to reiterate that the Motilal Oswal note lays out the target price at 282 rupees a share.
282, yes, yeah. That's the target price, and of course, it's about a good 30, 40 or 50 points away from the current levels. But that said, moving on, there's no respite for cement makers as price continue to fall amid rising supply and muted infra activity. A survey of 9 cement dealers across different to tell us more about the survey findings.
Month that on all India basis the cement prices have fallen. If you look at this month, December, the price cut seems to be minuscule at ₹1 per bag on all India basis. But then that also shows up a pattern that these companies have been unable to take any kind of price hike. We've seen a muted demand coming in from almost all the regions, be it north, central, east, west. But then the major downtick is actually the weighing factor is the southern region, which has seen the sharper cut coming in. We spoke to Sanjay Ladiwala, and he pointed out 2 factors which are actually bearing on the all India cement prices, with one being ACC and Ambuja. It's a year end for them, so they've been pushing volume to the cement dealers and in short exerting some kind of pressure around these players. Also south-based players, where there is not excessive demand as compared to that of supply, they've been pushing their products in other markets and exerting the pressure. Now if you look at the price chart that we have, southern market, it's the 5th consecutive month that the southern players have gone ahead and taken sharp cuts of as much as ₹5 per bag in the month of December. What really goes behind the pressure which is contributing to the southern India is the slower approvals that we're looking at in the real estate projects. There have been delayed government payments to contractors and the instability around the government. That's purely weighing down on these southern-based players. Whether or not would we see any kind of respite coming in on the cement prices anytime soon? Well, 2 different regions, 2 different perspectives coming out there. If you look at the southern region, we spoke to Ramco Cement Managing Director, and he said that the pricing power remains elusive and doesn't expect that to be returning anytime soon, given even as the infra uptick in Andhra Pradesh and Telangana, which is, according to the director, not enough as compared to the supply that the region is currently witnessing. Northern India, however, the dealer check suggested that there could be a price hike coming to the extent of ₹5 to 10 per bag. What brokerages per se have a view on whether or not the price hike could be on card for the cement players. Morgan Stanley has said that they factor in only 1 to 2% price hike in FY20. That's the downward to what they suggested earlier, to the tune of 3 to 4% for FY20. The same view is held by Kotak Institutional Securities, who said that the cement demand hike is contingent upon the industry utilization, which at least for the next 2 years doesn't seem to be rising, given the kind of addition that the whole industry as a whole is witnessing right now.
Okay, Nikki, thanks for putting that into perspective. So that's the complete comprehensive view of what the cement industry is going through. But I must say, it's 2:30. Nikki, thanks for that. But I must say, it's 2:30 and the markets are looking like as if the world markets didn't move an inch over the last couple of days. Let's talk about this really interesting move that we've had in the session today with our technical experts. Manav Chopra of Indiabulls Ventures with us on the show to talk about that, as is Amar Singh of Angel Broking. Gentlemen, both of you, good afternoon. Thanks much for joining in. Manav, did today's move catch you by surprise?
Actually, we had also earlier mentioned a couple of times the lower support of 10,550 and 600 would be the levels where one can still look for some positive reversal if it happens. So, at the end of the day, the kind of price patterns we witnessed over here, it clearly indicates that on the lower side, the cushion for the markets would be near the 10,550, and the upside, the hurdles would be at 10,900. Neeraj, I sense this would be the broader range for the markets going forward, and after that sharp 1,000 points move from 10,000 lows, I think the markets are likely to consolidate its gains. And historically also Nifty is outperforming the world markets like US and S&P 500, and such kind of a formation is further it's looking very positive for the markets going forward. So for a medium-term perspective, I think 10,550 would be the lower benchmark that we're looking at. But eventually, post this consolidation, we expect this breakout to happen on the upside, and we do maintain a medium-term upside target of 11,400. Specifically for Bank Nifty, we expect this outperformance to continue, and specifically from the banking space, select private banks and not to be surprised, the PSU banks would see this outperformance. Bank Nifty has maintained its lower support at the 100 EMA, and a reversal is indicating, from here on, I think we could again see some sort of a positive momentum in Bank Nifty if we close above 27,100, and that could be one of the triggers for the markets going forward. But as long as the Nifty doesn't surpass 10,900, I think there's a high chances that we would consolidate. There could be a sideways consolidation, and post that an upside breakout.
All right, and as we speak, the Nifty trades at day's highs comfortably above the 10,700 mark, at around 10,730 to be precise. Amar, good afternoon to you as well. This expiry is turning out to be something that we didn't really expect, especially given the kind of global cues. How are you reading these levels, especially when it comes to the Nifty and perhaps the Bank Nifty? And how are you placing your bets here?
Yeah, I would say that looking at Nifty, if you look at the Nifty chart, daily chart, we've seen a false breakout happening on 19th of December, when the earlier peak that was made on 3rd of December of 10,941, that was taken out. And then we saw a sharp correction Nifty, and today Nifty, in spite of opening low and going lower, but managed to pull back. That's been, I would say, that's remarkable. So clearly reflecting that there is consolidation, and also there's buying interest which is coming in, and also short covering is happening around 10,500, 550 levels. So that clearly is there, that the market is showing signs of resilience in spite of the sell-off which we witnessed in the global markets. And technically, if I look at it, what we are witnessing was that the low that was made on 11th December, the results day. So now that should act as a very crucial support. And also, if you look at it on daily charts, we are seeing clearly the tops and the bottoms which are being formed now, they are not in harmony and in sync. So reflecting that there is going to be consolidation in the markets, there's going to be choppiness in the markets. But yes, the downside seems to be capped initially around 10,500, 550. However, on the upside, 750, 10,750, 10,850, that's going to be act as a crucial resistance zone, because only taking that out comfortably and consistently consolidating above that level would mean that Nifty could go in for some meaningful rally upside.
Okay. Manav, you have buy calls this afternoon. Can you take us through them?
Yes, my first buy call is on Siemens. On the monthly perspective, the stock has declined from its peak of 1,500 and has been forming a good base formation around the levels of 950 to 980. After a good consolidation, the prices have witnessed a breakout on the monthly charts, which is also accompanied by much higher volumes since past 5 weeks, which is indicating that this price is likely to move forward. And in spite of markets showing the weakness, this price, the Siemens was actually forming a series of minor higher bottoms and tops. And with the positive breakout today, I sense going forward, this could be a stock which could outperform the broader markets and eventually could provide that extra return. So on the lower side, 1,000 is a very strong support, and one should maintain a bound dips with a stop of 980, and we expect higher targets of 1120. My second buy call will be on Union Bank. From the PSU banking space, I think after a good breakout, this stock has been consolidating, and it has still maintained its crucial support zone. It's still trading in the mid of its 100 and 200 EMA, but eventually, as the prices formation and the structure indicates, the price is likely to see a breakout on the upside, and with a strong support around the 80 levels, a stop loss of 78 can be maintained. We expect higher targets of 92.
And Amar, what about you? What stocks are you betting on today?
Yeah, the first one, if I look at it, that's a buy on Siemens. Because if we look at Siemens, I would say that on the daily as well as the weekly charts, clearly reflects that there is bullish momentum and the momentum continues to grow. And also looking at the long-term charts, it's been moving from oversold territory. And it's taken out some recent resistance levels because it was consolidating, unable to breach the 1,000 mark. So it's trading above that level. So any pullback towards 1,020-25, that can be a good level to buy with a stop loss of 987 and a target of 1,082 in the short term. And the second stock to look at is that's from the sell side, that is from the real estate pack, that's DLF. What we are witnessing in DLF is again trading, choppy trading sessions. And even on the long-term charts, the stock has very strong resistance at higher levels. On the daily charts also, it's not very strong. I would say technically it's clearly displaying bearish divergence on the daily charts as well. So DLF, if one can look at going short any rally towards 177, 178. Currently it's trading around 177 levels. So one can short around these levels with a stop loss of 184.4 and a target of 165 on the downside.
If I can just slip in one question before we get to Sharath Dubey for the buzzing stocks. And Manav, the trend that you've seen in, say, a Jubilant Foodworks today or an Avenue Supermarts today, recoveries from the lows after getting beaten down the last couple of days?
Exactly. In fact, Jubilant Foodworks, its earlier lows, Neeraj, was around 1160 levels. And, today the prices did breach those levels briefly, but it has recovered from that. So eventually, I sense Jubilant Foodworks is going to see a sideways move, but someone who only wants to initiate for a very short-term perspective, maybe for a day or two, can look to re-enter even at current levels. It has a limited risk on the downside, but eventually with the mean reversion, I think the stock could see a short-term rally towards the levels of 260. The broader near-term trend is going to be positive to sideways for Jubilant Foodworks. For DMart specifically, it has been on a very good uptrend, and the kind of price decline that has witnessed recently, it has entered to its crucial support juncture, and as long as the 1500 level holds, I sense the price would again move towards its previous peak of 1700. So you still have a very good risk reward ratio into the play. And one thing specific about DMart is whenever the prices have actually tested its oversold zone, it has been very sensitive, and eventually we've seen a very good run up for into the stock. So if I have to choose one, I will definitely go for the DMart.
Okay, well, on that note, let's get in Sharath Dubey, who is, as usual, standing by to give us the buzzing stocks of the day. Sharath, good afternoon. What do you have for us?
Good afternoon, Agam. The first stock I've picked up is Vadilal Industries, which is down by almost 9%, falling for the fourth straight trading session and its lowest in a month. This is based on the news that in the company's limited review report, was saying that the audit committee and the board of directors have not been able to conclude on certain matters. Apart from this, Heritage Foods is up by almost 2%, which is rising on the second straight day. This is based on the news that India has extended its ban on import of milk and milk products from China. The ban has been extended for around 4 odd months. The third stock, Agam, we have picked up is Shree Cement, which is up by almost 2%. It's snapping its 2-day losing streak. This is based on the news that the company has fully commissioned its integrated plant at Gulbarga in Karnataka. Well, basically, this plant will have a capacity of around 3 million tons per annum. So these are the three stocks, Agam. Back to you.
Right, Sharath, thanks for joining us and taking us through those buzzing stocks for the day. But on that note, I'm going to get in a fundamental voice here. We have Avinash Gorakshakar of Joindre Capital, who's joining us in the studio now. Avinash, good afternoon, and thanks for taking the time out. Let me just ask you about your view about what's really happening right now in our markets. We've seen a clear upturn, and the Indian markets are clearly ignoring what's happening globally.
My sense is, I think, clearly what has happened today is quite surprising, because the second half has seen a very smart bounce. Hopefully, I would believe that, if Agam, the global markets stabilize, I think you could see a kind of a small recovery ahead of the FNO expiry tomorrow. But overall, I think the Indian markets definitely have positive headwinds in terms of a softer crude price, harder rupee. And I think these are factors which are definitely going to impact earnings quite positively. The markets will definitely follow global cues continues at least till the month end, and I think as January approaches, you could see then activity moving around the corporate earnings season, which starts off from the first week of Jan. So I think overall, I would believe that this kind of market would remain range bound. I think tomorrow ahead of the expiry, but nevertheless there could be a lot of stock specific opportunities where I would believe that FY19 and FY20 could be a lot better for corporates, hopefully if crude stabilizes at the current odd levels.
Right. So let's talk about a few sectors, engineering particularly, because that has been buzzing, and I believe you have a buy on Varroc Engineering. Can you tell us a little more about that?
In fact, Agam, Varroc Engineering is largely a auto component play. It's not a pure engineering company.
Pardon me.
But I think what sounds interesting, it's the 6th largest player globally in global lighting systems. Generates about 60% of its revenue from the US and the European markets, and has about 25 to 30% coming from the Indian market. So I think from a peak of 1,100 rupees, the stock is corrected by almost 45 odd percent. And this is a quality play. I think enjoys EBITDA margins of almost 8-9%, and clearly with the kind of growth momentum seen in the passenger car, two-wheeler space, and the new kind of order wins, I would not be surprised that around 650, 660 the stock could possibly make a bottom, and this could be a good value buy at these levels. In fact, the OFS was done at around 960 odd level. So I think investors who have actually invested in June are seeing the erosion of their capital by almost 50% in just few months. So this is definitely a quality play, and we have been recommending our clients to actually accumulate this stock on every decline.
Okay, and not a target really, but do you reckon that the quantum of upsides could be northwards of what, 25-30% or maybe more?
I think we are looking at a target price, Neeraj, of at least 930, 950, because I think
this
clearly.
Is 1 year?
I think in the next 12 to 18 months, because the stock trades at about 15 times FY19. We are looking at beyond FY19. FY20 would be a lot better, considering that they've got order wins from both Hero Motor and TVS, which would be incremental order wins for them.
Okay, so that's the one on Varroc Engineering. That's an idea from Avinash Gorakshakar. We'll take in one more idea from him in a few minutes from now. But as we speak, the Nifty Bank is up and roaring. It's up about 230 odd points, and a lot of mid-cap stocks have gained some bit of traction in the last 30 to 45 minutes of trade. I think just want to highlight them and maybe get a fundamental view on some of those, if not all. So Brigade Enterprises, the management that we spoke to, is now up 10%, 9.7%. It's gained quite meaningfully, I think, post the interview. So 227 and counting. Watch out for this one. The other one is Supreme Industries, which has had a big move today, and a large portion of the move happening in the last 30 to 45 minutes. So again, a bump up that has come in on that one. Last but not the least, Astral Poly, which has gained a little bit of ground as well in the last few minutes of trade. Actually, Avinash, these southern-based real estate companies, Brigade Enterprises and Motilal Oswal speaking about the lease model being much higher. The management saying that the revenue upticks would be much higher than what the 5-6% that MOSL is factoring in. The Prestige Estates also has gained a little bit in the last few minutes of trade. What's happening with these companies? Would you buy them?
I think, Neeraj, as far as Brigade Enterprises is concerned, I think the model is fairly unique. I think the lease model, and clearly the kind of numbers which are likely to come out clearly dispel the fact that there is any slowdown in the Bangalore market. In fact, Brigade is a large player there. I would believe that investors who want to actually take a concentrated bet on some select smaller kind of real estate companies could definitely see a better risk reward. I think the larger players could possibly be haggled with a lot of debt and lower return on capital ratios, but Brigade definitely should be a shade better. So clearly somebody who's looking at a pure investment bet, and that too from a medium term angle, definitely the stock should do well.
231, look at that move. It's up 11.5% now as we speak. Should get a trade call going as well, Amar. Brigade Enterprises, and frankly, a big portion of the move coming in after management reiterating the numbers and actually saying that the numbers would be much higher than what the report originally envisaged. So very good conversation, but what about a trade here?
Yeah, looking at Brigade Enterprises, what we are seeing technically on the charts is that somewhere the stock was meeting with resistance around 220, 225. So technically that has been taken out, and also if you look at the intermediate term and the daily charts, they clearly reflect that there is bullish momentum on the stock. And even on the long-term charts, the stock has taken out. If you look at the quarterly charts, it's taken out its last quarter's high of 225. So there is upside momentum, but not a level to buy at these levels because the stock has has significantly rallied. Ideally, if one is holding on to the stock, one can look at booking profits around 245, 250 levels.
All right. Well, the other stock which has been buzzing in trade is Jet Airways, usually a tough one to call out. But let's take in a technical view here, because it is higher by as much as 5%. What it has also seen is some amount of consolidation within a range. But Manav, how would you go about Jet Airways? And if not Jet Airways, if I were to compare that with Interglobe Aviation, how would you approach both these companies?
See, if you're looking purely on for a short-term trading momentum, I think keeping that picture in play, I think Indigo still has a better and much safe structure compared to Jet Airways, for a simple reason that Indigo has come out of its medium-term trend reversal, and it has been continuously being in an uptrend, forming a series of high tops and bottoms. Currently, the risk reward for Indigo is not favorable. I suggest, in case if there is a short-term pause or a consolidation and a dip towards the levels of 1100 could be a right level to enter at the lower levels. Maybe that, and for a medium-term perspective, I think one should target Indigo towards the levels of 1250 eventually. Jet Airways has given a breakout today on the intraday charts, but one should only initiate long position with a strict stop loss for a simple reason. The stock has been witnessing a lot of volatile movement, and on the lower side 255 should be a strict stop loss, but eventually only playing for a short-term bet, I think the upside target could be close to the levels of 285.
Rocking and counting, it's really good going really for the likes of Jet Airways too in the session today. So good moves all round for companies. Avinash, the other stock or the other company that you are looking to invest money in is RITES. Now, what's the rationale here?
In fact, Neeraj, the rationale here is clearly we like the business model. It's not a very asset-intensive model, and most of the money.
For the viewers, what would RITES be doing, and what do you like about the business model?
No, RITES is basically a railway infrastructure play, and which provides largely consultancy services to the railway and infrastructure sectors. Roughly 65% of their business comes from the consultancy business, and the remaining 35 to 40% comes from turnkey projects, again catering to the large infrastructure kind of pieces of the economy. If you look at the business model for FY18, the management has clearly hinted that 65 to 70% of the order book, which is currently about 4,500 odd crores, is going to be coming from the consultancy income. And consultancy, mind you, makes a EBITDA margin of close to about 40 to 45%. Very asset light and highly, accretive in terms of return on capital employed. If you look at the first half performance, Neeraj, also the breakup is quite positive in favor of the consultancy income. We've seen consultancy share roughly about 62 to 63%, and the turnkey business, contributing to the half. So our sense is that over the next 2 years, with the order book of close to about 4,500 crores, and an EBITDA margin of close to about 35-36%. We've already seen an earnings of close to about 90 to 20 rupees on a full year basis for FY19, and typically, most of the companies which actually generate ROE and a return on capital employed in excess of 20 to 22%, we could see, valuation multiples expanding gradually. In fact, on a 200 crore equity, the company has already generated a profit of 210 crores. Our sense is that the second half, the management is hopeful that a lot of L1 consultancy projects also could fructify. And typically, since the asset addition to the balance sheet is not going to be large, unlike a NBCC or maybe an IRCON, where EBITDA margins are just about 8-9%, and where a lot of money gets stuck up in working capital, this is a debt-free company with a very solid working capital cycle. So our sense is, if somebody can hold on for the next 12 to 18 months, one could definitely expect a price of around 400 plus odd.
Okay. Avinash, of course, milk is in focus because of certain extension of imports from China. It really hasn't impacted stocks too much. But when it comes to something like a Parag Milk Foods or Prabhat Dairy, or for that Heritage Foods, they've come off quite substantially from the year's highs right now. While lower milk prices should have been an advantage for them and their margins, that uppo hasn't really paid out yet. So how are you positioned on this sector? And if you do like the sector, which one would you prefer? Which of these stocks would you prefer?
No, Agam, I think this rule which has been come is actually extended for a period of 4 months. So after 4 months, one really does not know what's going to be the status from the government on the Chinese imports of milk.
But if one were to look at the cash conversion cycle of most of these players, I think it has been quite elongated. In fact, Parag Milk has a very large extended cash conversion cycle, and I think overall within the given space, obviously this import blockage is definitely going to impact players positively. So here one could possibly look at a stock like say Prabhat Dairy and then probably Parag Dairy. I would believe that the stocks have not reacted very, very positively to this news flow, considering the fact that working capital still remains quite stretched for these players. And I think unless we see some operational improvement on the working capital cycle, it would not make any major dent as to this notification which has come in.
Okay, well, that's as far as your milk sector is concerned, but let's pull up some of your OMCs, and I want to see how IOC, BPCL, HPCL are doing, because despite the fact that we've seen that sharp fall in crude, today is one day where the impact on OMCs has not been so pronounced. In fact, Indian oil is trending marginally in the red. So let's find out and perhaps take a look at technicals, and maybe that could tell us a different story. So Amar, let me come to you on, you could pick up any of these three stocks, but they're largely not seeing too much traction. What's going on here? Are you reading trends on all three of them, or even just if you could just give us some levels to watch out on one of them?
Looking at IUC, what we are seeing is that the stock did manage to rally from almost 127 levels and then around to 143, and again it has corrected to currently traded on 134-35 levels. So on the daily charts, what we are seeing is clear consolidation, and as you rightly said that the stock is more or less trading sideways. And also if we look on the weekly charts, there is bullish divergence on the charts. So clearly reflecting that the stock has very strong support lower levels around 128, 130, whereas on the upside around 140, 145, that's a level of resistance. So that's the reason we are seeing this very sideways trending in this particular stock.
Okay, and well, along with that, let's also pull up something like a Reliance Industries, because we're getting a bunch of queries on that one, and what can be done here on charts. So Manav, this one is for you. Reliance Industries currently at around just short of 1100. What would your approach be to this one?
If for a very short-term perspective, the prices actually have recently declined from its short-term peak of 1150, and whenever the prices have tested its 100 EMA in the past, it has rallied by 4 to 5% within 7 trading sessions. So today it roughly managed to test its 100 EMA, and it is seeing a positive close. I sense on the near-term perspective, the immediate targets for this would be at 1150 and eventually on the upside 1200. So this is the overall pattern structure, and the risk reward is also quite favorable. On the lower side, 1050 should be the stop loss.
Okay then, well, a bunch of stocks flying around. Avinash, last couple of questions. One, can't not talk about what to do with the auto ancillary names. The channel checks by certain guests seem to suggest that auto numbers have come off quite a bit in the month of December. Auto ancillaries have fallen quite a bit already. Everything from a Bharat Forge to a Motherson to a Jamna Auto, all of them are substantially off from the levels that they were at. Do they provide good buying opportunities, or would it be prudent to wait because the valuations could correct even further?
No, I think, Neeraj, it's better to wait for the Q3 numbers to come out, because as you rightly mentioned, this time the festive sale numbers have been slightly below expectation, especially both for the passenger car as well as the utility vehicle sector. Even the commercial vehicle sales have come off. Our sense is that, companies which are obviously directly impacted could possibly be players like Motherson, Bharat Forge, or typically even Jamna Auto. Typically, companies like even Sundaram Fasteners provide good investment entry points, provided, we see those corrections happen. I would believe that Q3 numbers are not going to be encouraging in terms of both the top line as well as the bottom lines, because largely the auto OEM business is largely volume driven, and when volumes dry off, obviously their operating costs go up and the fixed cost element continues to be there. So would prefer to definitely look at these companies, but after the Q3 numbers, hopefully after listening to the management commentaries and seeing what is the kind of strategy the OEM players adopt, so that recovery happens.
And perhaps a final question here from my end, Avinash, is what I've been noticing in other shows as well. We're getting a lot of queries with respect to commodities, perhaps metals specifically. How would you approach this entire sector right now?
I think clearly within the metal pack, I think, pure steel companies like maybe a Tata Steel or a JSW could figure out to be better bets compared to, stocks like say Hindalco or a Vedanta. I would believe that, aluminum is one space where possibly we could see some price point slipping further into negative territory, and there possibly one could avoid maybe, ferrous metals like, aluminum or maybe copper. But overall, I think if one were to look at the steel companies, I think volumes have been still quite robust, and hopefully I think margins should improve. We have not seen a very strong kind of drop in global prices for steel, and there have been some marginal steel price hikes. So probably Tata Steel could possibly be a better bet, and probably if somebody wants to take a slightly more concentrated aggressive bet, then JSW Steel could be a good bet. Okay. Avinash, we will leave it at that. Thanks much for taking the time out and being with us today. Really appreciate. And a couple of investment ideas that Avinash Gorakshakar has suggested include a RITES. He believes that that company is well poised for making some growth. And Varroc Engineering is the other one that Avinash believes people can make an investment in. Both the stocks slightly off in the session today, so good levels to buy if you're indeed convinced with the logic. Before we take that break though, I just want to quick check on the HDFC twins, because both of them are I think the top contributors. If you just bring up the contributors list, I think you'll see HDFC and HDFC Bank at the top of the pile, then a Reliance, then a Larsen & Toubro. So no surprise out there that these two stocks are doing what they're doing. At the other end, of course, is Agam Space, which is IT, but banks and financials and the HDFC twins certainly doing well. Quick thoughts here, Manav. HDFC, HDFC Bank, either of them good for a trade?
Absolutely. In fact, looking at the charts of HDFC Bank, the prices have actually also closed above its recent gap pattern, and today the prices are also forming a strong bullish engulfing. So if I have to pick one, I'll go with HDFC Bank, because the volumes are also confirming the same and the overall trend remains bullish. Eventually, the kind of a consolidation that it is coming out of, it is likely to see a breakout from its recent swing high of 2160, but eventually the one should maintain upside target of at least 2200 to 2250. Lower side can look to buy on dips. 2080 could be the short-term stop loss on the immediate basis. HDFC Bank overall, I sense, could see a short-term range bound movement. It has stiff resistance at 1985 on the upside. So unless we don't break that, I don't see any good positive follow-up coming in HDFC Limited. So one should look for buying HDFC Bank for momentum pick.
Okay, well, on that note, we're going to slip into a short break, but don't go anywhere, because on the other side, we have the Fab 4 stocks of the day, as well as the dealing room check at 3:15 to tell you about what the dealing rooms are recommending to their clients. So stay tuned in, lots more lined up.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
Or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
so much left to do.
Who knows what life will bring?
The road is long.
The journey full of promise.
The pursuit
only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments. good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Nifty Bank is up 1%. 28 minutes left for the markets to close, and I don't think anybody anticipated this yesterday or this morning, but we are up 1%. Almost 27,000 for the Nifty Bank, trading at the highest point of the day, and that's leading the Sensex and the Nifty higher too. Boy, this is one amazing day of trade. It's not large gyrations, but from being down 0.5% to being up 0.5% for the Nifty, it's a very strong 1% intraday move, which fairly heartening. By the way, as we speak, Brigade Enterprises is up 14%. Some strength in J. Kumar Infra, which is up about 5%. Siemens is up about 4%. So a clutch of those names are doing rather well for themselves in the session today. But let me not steal the thunder from Yash, because maybe some of these stocks are finding mention in that list as well. Let's try and find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. You almost got 50% of my list right. So sorry. We'll start with Brigade Enterprises, and as you mentioned, it's up 14% after that Motilal Oswal report, wherein they have initiated coverage on the stock. Now they have assigned a buy rating and have set a target price of 282 rupees, which indicates a potential upside of close to 37%. That apart, Nagarjuna Fertilizers is up 11 odd % after the company came out with an exchange notification saying that it is in the process of a long-term debt resolution with its lenders. That apart, it has also restarted the production of urea at one of its plants in Andhra Pradesh. Jet Airways is up 5%, tracking the weakness in crude oil prices. We had the Brent crude falling more than 6% on Monday, and that is aiding the aviation stocks. And Siemens, as you mentioned, is up 4% as well, gaining for a second consecutive day. Volumes are more than double the 20-day average. Back to you.
Okay, thanks a lot for that, Avinash. Just a couple of queries that I do want to take. Some of them have come in on our social media feed as well. Amar Singh, one of the queries is the Bank Nifty levels that one can expect for tomorrow's expiry. Looking at the move today, what are the levels that you would keep in mind?
I would say that looking at Bank Nifty on the daily charts and the way the Bank Nifty has rallied today, I would say the level to watch out for tomorrow is 27,250, 300 on the upside, because that's a crucial zone of resistance. Whereas on the downside, I would say somewhere around 26,700, 650, 700. That's a range that we could see Nifty trading in with a positive bias. If Nifty sustains above 27,050 levels, then it could witness a 250, 300 point rally.
Okay. Oh. Well, on that note, let's also bring in Ajay Srivastav of Dimensions Corporate Finance on his outlook for 2019. Bloomberg Quinn spoke to him earlier, and this is what he had to say about the Indian markets going forward. Listen in.
Quite positive actually what's going to happen to Indian market in the next year. I think everything that could be wrong went wrong in last year. I think we are in a wonderful position at this point of time, both in terms of the economic variables and the market structure. I know there are lots of naysayers about fiscal deficit and the, this bank loan waiver, etc. But that's accounting entry. That's not real money being given out to people. You could have never recovered the bank loans to farmers in any case. So might as well write it off in the books, clean up the books in any case. But all in all, a great positive, because I think you have a market where there are long-term buyers, no panicky sellers, market is not over leveraged. Yes, tremendous global overhang on the market, but that also triple overdone. We have a low volume international market being driven down. So oil is where it is. Interest rates are peaked out in India, I think should go lower. The government is looking a lot more friendlier as compared to the past. You got everything going for yourself, my friend. This is going to be a great year for the markets. I'm greatly positive on this market for this year, given the construct and the economic situation.
But would it be in isolation, or would you believe it will so what I mean is, even if global markets fall, do you still think India will do well, or do you think India will be a relative outperformer?
One, I think it will be relative outperformer. You know, global markets also, let's be honest about it, they had the good time till the 11th month of the year. December has been a massacre, absolutely. You should see recovery coming around at the end of the day in the system. Some point of time the market will recover. You know, these market moves in the last 1 week are over exaggerated because you know very well liquidity is very low, and therefore any single selling can take over the market so badly. You saw Japan open yesterday at almost 5% circuit because no other global market was open. All the traders are out. So, you know, I don't think we should extrapolate too much from what happens in this week and come into this week, the whole of this week till the New Year's. Let us wait till we see from the 5th or the 7th of January how the market pans out. I think you will see some kind of recovery coming in. That's one. There's too much being read into the QE ending in Europe. That's a factor. That's definitely a factor. But I think you will see responses from central bankers coming down in the first week of January. So if you haven't sold, you have the ability to hold the shares. Hold it, in my view, because this is going to come out of it, I think, pretty soon. I think it's been sold down too fast, too rapidly in an illiquid market.
I remember a conversation maybe last Diwali, wherein it was a pertinent point that you made, that, you know, everybody's having alcohol, so let's go out and buy those companies. They may not have done too much in the year thus far. In fact, as we speak, consumption stocks, by and large, the Jubilant Foodworks, the United Breweries, etc., all of them are coming off. What do you do here?
I think you just keep adding. And I have a very simple philosophy of life, that you will have cycles of year, 2 years, when the stocks will do extremely well, then they will correct, and then they will start to roll back. But you've never seen structurally year on year, if you look at a pattern of these stocks, to come down. Now, Jubilant is a little outlier because the valuations are pretty aggressive at this point of time, or any point of time since the stock has listed. For reasons I don't know, but it has been aggressive. But for the other stocks, I think they have a good franchise. You just keep buying. You never lose money. Have you ever lost money in Hindustan Liver by holding it? No, you won't lose it. Have you lost money in Nestle? A part of the Maggi little shenanigan happened, again, Justice System of India? No, you don't lose money. The question is, it's not about, when they're coming down or going up. Question is, can you keep adding them up to your portfolio and don't sell them? You know, you can't recreate franchises like these at the end of the day in any country whatsoever. And India is gradually becoming a more MNC-owned kind of a business country by and large. And with their cost of capital, they are ruling the roost at this point of time. So you don't want to get away. And can you imagine, at someday, I'm not saying facetiously, someday 700 million people, 800 million people of India start to consume these products. I think you just can't sell these stocks at this point of time. You just have to keep buying. Don't worry, they may correct 2%, they may correct 10%, but do not lose faith in them. Just keep buying and adding. These are your retirement stocks. They don't bother you, they don't fall 40%, they don't disappear like PCJ, etc. They don't do. So why do you not want to pick them? Because the risk is much lower. The returns are muted, or maybe 15-20%, but look at the risk quotient, hardly anything. So look at risk more than just the return as well.
Okay, then we're moving on. 2018's turned out to be testing times for the Indian markets, with the benchmark managing to post marginal gains. This typical should have corrected and the premium, but a comparison with the MSCI Emerging Markets Index will show otherwise. Nikki Mirchandani is here with the details. Nikki?
Hi Agam, I'm going to just put things a little more into perspective with the way PE has panned out in terms of the premium as compared to what we've seen with MSCI Emerging Market Index. Right now, if you look at the index premium between the two, that's the Nifty index at 22 times, and the MSCI, that's the blue line here, at 11.31. That's at an all-time high level kind of a premium, almost 100% premium that we're looking at right from the inception of MSCI, which was back in 2000. So clearly, it is only during this 2001-2002 period period that we've seen MSCI trading above Nifty. It's always Nifty which has commanded premium as compared to MSCI Emerging Market Index. And if you look at this line graph, you would notice in from 2010 onwards, the premium has actually started widening up, or rather has started doubling up from the levels that we'd seen earlier. What goes behind this and what does this imply? We spoke to Deven, who suggested that the expectation of 15 to 20% corporate earning growth for India for the next financial year, as combined with the expectation that the doubling of market capitalization from the current levels to a tune of around $3 to $5 trillion in the next 5 to 10 years, definitely place India in a better attractive position as compared to the rest of its peers. Apart from that, however, he suggested that one can expect the premium now to be in a relatively corrected mode, at least till the time of 6 months, to the global issues like the trade war, crude prices, and also the European growth economy have been addressed for that matter.
We'll watch out. Nikki, thanks for that. Let's see what reversions happen and how do they happen. But for now, I don't think the market is in any mood to revert to anything, because it's just staging and staying put at this 0.5% uptick. Just that stocks are changing their fortunes. Bharti Airtel now is the top gainer on the index, 4.32% higher. Zee Entertainment 4.18% higher. So some strong moves really across some heavyweights, and they're trading at the highest point of the day. Bajaj Finserv is back to 6,400 odd levels. Ultratech is back about a couple of percentage points higher. So strong moves really coming in for a bunch of these names. Siddharth Sedani of Anand Rathi with us on the show. Siddharth, good having you. Thanks so much for joining in. Some short covering led moves, I agree. But let's talk about a couple wherein the valuations are a lot more reasonable than what they were otherwise. Zee Entertainment, is this a dead cat bounce because the stock was too oversold, or do you reckon that there could be more in store? Would you be fundamentally a buyer in Zee?
Good afternoon, Neeraj, and thank you for having me on the show. Well, Zee Entertainment, in terms of the historical performances as well as the results which it has been posting and beating hands down the other peers in terms of ad revenue growth or subscription growth for that matter, looks quite strong fundamentally. Of course, the news flows which we have been hearing about, that management is looking out to come out or sell some part of a stake in the company just to go more digital, just to strengthen the arms of the company in the digital arena. I think that's a very positive point, and we are quite confident on Zee Entertainment. In fact, we have a buy rating on the company, and we believe there is a good upside left in the system. Overall, we know that media always does good in the election year is concerned, and of course we have in front of us in 2019. So overall perspective, Zee Entertainment, looking at the ad and subscription revenue growth, looks quite strong.
Okay. All right, so well, that's your view on Zee Entertainment. But Siddharth, when it comes to some of your other players in broadcasting, there are suggestions that because this is a election year, there's a possibility of well, increased revenues to come through, which can improve prospects for a whole host of these broadcasters. So if you leave Zee Entertainment aside, how would you view the media industry in general going on, because we really haven't seen that much of an appreciation in something like a TV18, or for that matter a TV Today as well. So of course we all know that Sun TV for that matter is reeling under pressure, but because of its own fundamental reasons. What is your view here for these other broadcasters?
See, majorly we are overweight on Zee Entertainment. Having said that, apart from that, if I talk about any other media, I think print media looks quite interesting. Some of the online on-air medias, likes of radio and all that, looks quite reasonably good. But still, if I want to pinpoint any particular play to buy at the current levels or to buy in a staggered manner, would be only Zee Entertainment, because we have other interest in other medias, but I think the confidence and the conviction which we have in the Zee Entertainment, I think we don't have any in any other stock.
Okay. Let's stay on, Jamin. Let's get a sense of what dealing rooms are recommending in the session today. Darshan Mehta and Yatin Motar here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Good afternoon, Neeraj. I think the cement pack today has managed to do well over the past few days. There was selling pressure that was going on. I think this is what Yatin is going to speak on.
So, yeah. Siemens, of course, the future and option trend does suggest that,
a buy today, sell tomorrow kind of a strategy could be possible here, and dealers do expect this stock to do well. In fact, Siemens is one stock which has risen from levels of 900 to almost 1050 today. So in a otherwise weak market, stocks like Siemens are doing well. Apart from Siemens, do watch out for Nalco. Today the Commerce Minister also spoke about as to there is a requirement of anti-dumping duty on aluminum, and if that really happens, companies like Nalco, Hindalco would benefit, and on the back of that news particularly, we are looking at some buying which is happening in as far as Nalco is concerned, and of course Hindalco to a certain extent. And finally, in the cash segment, dealers are indicating that BF Utilities is one stock wherein a short-term uptick could be seen. After the recent correction, dealers are expecting a bounce back in select mid-cap names, including the likes of BF Utilities, but Darshan has a few more stocks to
Yeah, so cement, as I was saying, cement as a pack over the past few days has seen selling, but today most of the cement counters have managed to do well. Look at ACC. ACC is up almost 2.5% in trade, so there is traction that's happening. Apart from it, Ambuja. So some of the domestic mutual funds are actively accumulating cement stocks, so watch out for cement as a pack. The other stocks that dealers are talking about, and that is United Spirits. After a huge amount of selling that's there, today there is a bounce back that's happened. Some of the dealers do indicate that majority of the selling is over in the counter, so there could be a little bit of accumulation that could come in on United Spirits. And one counter which is up almost 6% is Jet Airways. Some of the HNIs are actively accumulating. Two reasons. First of all, crude has managed to come down significantly, and Jet Airways has moved out of the F&O ban, so there could be open positions that would be taken. So Jet Airways is something in which positions are taken today.
Okay, Darshan, thanks for joining us and taking us through the dealing rooms and what they are suggesting to their clients. But I think we have time to take just one more query here. So we'll take one up from Kunal Oza. He wants to know about what to do with Hutco. Hutco, as we all know, has continued to slip through the course of the year. From highs of around 90, it has halved to go below the mark of 45, currently trading at around 43. Amar, can you come in on Hutco? It's clearly now testing its final daily moving average as well on the lower end. What would your suggestion be for Hutco? Firstly, would you enter the stock? And if you had held the stock, what levels would you watch out for?
Yeah, looking at Hutco, what we are seeing here is that the stock has been on a relentless slide, as you rightly said, from almost 95, it's more than half. Currently, it's around 43 odd levels. And looking on the weekly charts, what we are seeing is that there is positive divergence on the chart. So clearly reflecting that the downside now definitely seems to be capped, and the low that was made in October, somewhere around 40 levels. So that's a low that the stock is respecting. And however, on the upside, the stock has a level of resistance around 40, 46, 47 levels, because if that is taken out, then the stock has a potential to rally towards 50. But you can say that 50 is a crucial zone of resistance. Only above that, there would be a meaningful rally in this stock. But the stock is now gone into consolidation, with the downside definitely seems to be capped around 40, 42 levels.
Okay, time now for some closing strategies as well. We're just about there. So let's do that. Kunal, I'll stick with you, Amar. Firstly, your top closing strategy.
I would say that's from the cement pack. Grasim is one stock one can look at. Because what we are seeing in Grasim is that, again, on the daily charts, there is bullish divergence, and also it did manage to rally towards 876 and then corrected to currently it's around 820 odd levels, and technically also it's looking positive on the weekly charts. However, it's in oversold territory even on the long-term charts, so there is a possibility of a bounce back in this stock. So Grasim is one can look at. Any pullback towards 810, 815 levels can be used to initiate a long position, with a target of 855 on the upside and a stop loss of 798 on the downside.
Okay, and Manav, how about you? Your closing strategies for the day?
See, at the current levels, like I mentioned, PSU banks are showing some sort of a movement, and Bank of Baroda has witnessed a good breakout on the intraday charts, specifically after a consolidation of 4 trading sessions, and the volumes are also indicating that this momentum is likely to continue on the upside. So a stop of 115 on the lower side for an upside target of 125.
Okay, well, steady set of names that are revving up. J Kumar Infra has gained a little bit in the last few minutes. Jet Airways has gained even more. It's now at 270. So good showing there. And I think the Adani Group stocks have done reasonably okay today. For a change, Adani Ports is doing better than Adani Enterprises, which is also in the green, by the way. But Adani Ports, 4.5% higher, trading at the highest point of the day. Enterprises just about 1.5%, but a big move or a slight move in the last few minutes of trade here. You want to come in out here, Manav? Adani Ports, maybe?
Yes, in fact, the prices has seen a very good break today on the intraday basis after testing its 200 DMA. And overall, after a good sharp rally that we witnessed from its lows of 300, there was no price correction witnessed. In fact, the prices were consolidating above its crucial support juncture. And in such a scenario, usually we see this price breakout on the upside and the momentum is taken forward. So definitely it's more or less a buy on dips approach. The lower support for this stock would be at 370, but eventually I think one can target the stock towards the levels of 430 to 440 in a medium term perspective. This should ideally not be traded for a very short term perspective, but someone who can have a view of at least 3 to 6 months can actually make 15 to 20%.
Okay, let's wait and watch if that happens or no. Some other queries that have come in. Actually, Siddharth, while a bunch of people asking about what to do with the metal names and in particular HEG and Graphite India, any thoughts here?
Well, there is a price pressure of the electrodes in China today, and that is why there is some kind of a tepidness in both the stocks. Still, I believe that graphite has more or less taken up most of its stride and discounted most of the gains in terms of rise in the product prices. But I think HEG can have a little bit of a bigger room from here on. Overall perspective, we are not that constructive over electrodes. Currently, we are looking directly steel play. Companies like JSW Steel, although the entire metal pack has been correcting because of the global problems which we already know. But having said that, JSW Steel increase in capacity, realizations are going better, and I still have an understanding that this government will definitely keep protecting the domestic steel producers. So JSW Steel looks very interesting to us with a long-term perspective.
All right, Siddharth, do you track Symphony in consumer durables? Because this one is under pressure, and as we have seen over the past previous few quarters as well, nothing is coming in aid of this one. If at all you track this one, your view here, otherwise on it's one of its peers that you may prefer.
Well, we don't track Symphony, and as we know that December quarter would be a seasonally weak quarter for the company overall basis. But having said that, this entire space looks quite interesting, especially when the GST rates are getting slashed and a uniform rate is also contemplated by the government. I think companies like Voltas, although Voltas would be little seasonally weak quarter December because of the AC sales, but overall perspective, Voltas looks interesting because of the second part of their businesses, that is engineering and the project business. I think engineering and project business has seen a lot of good turnaround of late, and we believe that coming quarters would be quite strong, because let's not forget that project businesses have a Q3 and Q4 which is strongest amongst the other quarters. So Voltas, we believe that some kind of a sentiment play will be playing out because of the GST reduction, so on and so forth, and engineering business would be doing good. So Voltas looks interesting with a target of 680.
Okay. We'll let you go on that note. Siddharth, Sedani, thank you so much for taking the time out and being with us. Appreciate your time. Look at Vadilal. There has been an intraday move. It was down and it's now up about 6% in trade. So interesting move out there. Nagarjuna Fertilizers has been a stock that's been, well, gaining for most part of the trading day today. It's a tiny tune, but nevertheless has gained a little bit in the session. Some other stocks include, well, after a really long time, I'm seeing a slightly positive move on Deccan Gold Mines. So that stock seems to have gained a little bit. If you can pull up Deccan Gold Mines, I think it's moved up a bit. Yeah, 2.5% up in trade at about 30 odd rupees. So 2 or 3 names that have done reasonably okay for themselves. Just before we start wrapping up the markets, the top Nifty losers, we have spoken about the gainers at length today. What about the losers? And Amar, what would you do with a TCS or an Infosys?
Yeah, looking at TCS, what we are seeing is that TCS has been on a, I would say, some mild correction because the stock was unable to trade above the 2020 odd mark. Currently, it's around 1900 odd levels. So technically, the long-term trend remains positive. But what we've seen is the sharp appreciation of the rupee is also somewhat impacting these particular stocks. And looking at TCS on a weekly chart, we are seeing that it is in for consolidation. Because the downside, if you look at TCS around 1840, 1850, that's a zone of support. But again, on the upside, seems to be capped around 2000, 2020 level. So it's more or less a flat trade for TCS, at least for a couple of days.
I think if I have time to just take one more question, which is IT related, and Mindtree, which is showing strength today after seeing a lot of consolidation over the previous few days. Manav, what would you do with Mindtree now, towards the long or the short?
Actually, looking at the overall formation, I would recommend to avoid this stock for a simple reason that the prices have been overall in a very sideways trading band. It's having a support close to the levels of 815 on the lower side with resistance at 870. So the prices are trading in the mid of its trading range. Until unless we don't see a break above 870, I don't recommend going long into the stock. Eventually, this sideways consolidation is likely to continue, and any trading momentum would be only seen bullish above 870 levels on closing basis.
Okay, Jaman, stay on. We'll just take in final thoughts from you. But here's how the markets are shutting shop. 10,741, about 0.75% in the green. Sensex about 223 points. The Nifty Bank about 1% higher. It's not been a bad day, I must say. And the close is actually looking even better with the Nifty Bank rock solid about 27,000. The mid-cap index, well, flattish. The small caps too flattish, but the larger BSE 500 index has not done too badly for itself. Agam will speak about all of that. Let me talk about the large caps first and see what's moving and what's not. Adani Ports about 4.5%. Z and Bharti have gained. FinServ has gained about 3%. The HDFC twins, the top contributors, have gained about a couple of percentage points apiece. What's not done well? Sun Pharma, some of the IT names like TCS and Infosys, and Eicher Motors has looked slightly wobbly, down about 0.75%. But Agam, what about the broader end of the spectrum?
Well, Neeraj, I was just running back to actually take a look at the NSE 500 gainers against losers, and it so turns out that it's actually equal, at least as far as the NSE 500 is concerned. So your advance decline ratio has certainly improved over the last 1 hour, even as the Nifty advanced. But I'm going to start off with some of the losers, and GE T&D has been one of those stocks which has moved, and it's been, okay, so pardon me, the gainers, and it has gained as much as 7%. Adani Ports is the other one, which has also been up and about, and that has also been, seeing some amount of gains, again, closing at day's highs. Hatson Agro, of course, while there is some marginal advantage, if at all, it is, well, that was also advancing, was currently at up as much as 0.1%. SpiceJet is the other one, in tandem with your Jet Airways as well as Interglobe Aviation, which is also trading higher by as much as 4%. Bandhan Bank is one where we get a lot of questions from. Of course, it has also been focused with respect to speculation in terms of mergers and acquisitions. That has also advanced in trade, up 4.5%. Symphony, on the other hand, has been really under pressure. It's down over 6%. It's actually likely to close down by as much as 6.5% now at around 1,075. So some pressure coming in there as well. 3M India is one stock that doesn't always figure on the highest gainers or the highest losers, but today it is losing out by as much as 5%. It actually started out with a considerable weakness, and it has since gained a little, and it's closing, well, off day's lows, but well, weakness all the same. Do remember, this is one of those companies where you have a substantial foreign holding. And finally, we have New India Assurance from the public sector space, which is also down by as much as 4%. So mixed cues coming in, and as I was suggesting just about a few moments ago, that the advance decline ratio has certainly improved, and that is something that we will likely see in the the National Stock Exchange advance decline ratio as well.
Yeah, well, certainly a bit of a leg up, though the decline still over the advances, but no complaints, Agam, I guess. So the market breadth is looking okay. The contributors list, actually the turnover should first come up on your screen. Okay, let's stick with contributors. Never mind, let's just stick to this. No surprise there, the financials and Reliance Industries out there, and well, IT on this side. Shouldn't surprise anybody.
But I'm sure turnovers will have, seen a little bit of a pickup considering it is expiry. It's much higher than what we saw last Monday, at least as far as the F&O expiry is concerned. Now, this is something this is the number that, people should be looking forward to, not something which is sub 10 lakh crores as we saw in case of Monday. And of course, the cash levels have also, cash trading has also looked elevated at this point in time. And I reckon a lot of this has to do with the last hour of gains that we've seen on the Nifty.
Certainly seems to be the case. But final thoughts from our experts. And Manav, Chopra, to you first. How does this set us up for trade tomorrow or on the near term?
In fact, the kind of a reversal that has come today, it is very comforting when it is when we are looking on the weekly time frame. A very strong reversal today on the intraday charts from the lows of 10,550, and it is indicating that definitely there is some strong cushion on the lower side. And if you look on the weekly chart perspective, it is indicating that it's likely to hold on to its lower base. So eventually, I sense, like I mentioned before, there could be a near-term consolidation, and likely this consolidation would witness a breakout on the upside. So in case if there is another short-term dip towards 10,600, I think one can still maintain a buy on dips approach. Your positional stop loss can be at 10,500, but eventually in the medium-term perspective, we expect this range to see a breakout on the upside. 11,200 to 400 would be the targets. PSU banks would be the sector to look at for next 10 to 15 days, specifically stocks like Canara Bank, Union Bank, Bank of Baroda, and I sense PSU banks could see a throttle of at least 10 to 15% in a very short-term perspective. So keeping that in play for a stock specific, I think PSU banks could be the sector to look at.
And Amar, how about you? What are your closing thoughts? We've seen the Nifty now comfortably above and back above 10,700.
I would say that looking at the way Nifty has been trading over the last many trading sessions clearly reflects that there is choppiness in the market, and the markets are yet to take any specific direction, because higher levels are being sold into and lower levels are being bought into. So technically, I would say 10,850, which I earlier had spoken as well. 10,850, 900, that's a crucial zone of resistance, whereas on the downside, 10,500, 550, that's a crucial zone of support. So Nifty is likely to consolidate, but yes, there is some positive bias which we are seeing, but only that would be confirmed if it trades and closes above the 10,900 mark. Then you could say that there could be further upside rally towards Nifty. As far as Bank Nifty is concerned, 27,000, 250, 300, that's an immediate level of resistance, which Bank Nifty could meet with tomorrow itself, and if that is taken out, then we could witness a significant rally in Bank Nifty.
Okay, Chairman, thanks so much for joining in today and giving us your perspectives. Really appreciate your time, and happy trading tomorrow. It's been an eventful day. Let's see if it perks up in the same way in tomorrow's session too. The world markets not looking as bad as they were looking on Monday as well as Tuesday. But with that, it's a wrap on this edition of Countdown at least. Up ahead, the market wrap with Agam coming up, where we'll sum up the day's action for you.